Welcome, ladies and gentlemen, to the uranium update on Commodity TV. Uranium is close to a breakout. The price around $53 to $54 per pound will come to an end due to constraints in supply and rising demand. 56 nuclear reactors are built within the next 8 to 10 years, with China already planning on another maybe 100-120 by 2045 to replace dirty coal. According to Cameco, there is no short-term supply to fill the gaps, and uranium prices could move quickly to over $80 per pound. That should be outstanding for uranium companies and their financiers. Some short squeezes will be likely, for example at Uranium Energy Corporation (UEC), where a hedge fund is short, and we think they will get in trouble soon by covering their position, as 42 million shares are still short in UEC, which makes to us no sense to do deals like this. Also, Sprott Uranium ETF has not restarted buying, and this might be then the wake-up call for a lot of professional buyers from utilities. Nuclear is the logic baseload energy source, as it is carbon-free and works 24/7. Also, Wall Street investors might wake up soon, starting to invest into the sector. Through the Ukrainian war, even the US woke up to rethink their supply, as before the war started they received over 40% of their uranium supply from Russia, Kazakhstan and Uzbekistan. To establish American and Canadian uranium mines is for the longer term the same important as it was to restart oil production in the USA. Of course, they can buy uranium also from Canada, Namibia and Australia, but with those new reactors built, the demand will rise tremendously, and so again there will be competition and supply risks of not getting enough physical material. Contracting restarts sooner than later, but who wants to contract at those low prices? I think nobody. How can you benefit as an investor from this situation? For sure, Cameco, the largest uranium company worldwide, is of interest. But the flagship Cigar Lake mine runs in 8 years out of ore. We prefer companies like Queen's Road Capital or Uranium Energy Corporation. Queen's Road Capital has a market cap of around 320 million Canadian dollars and is a real buying opportunity in our view. The company finances via convertible bonds mining companies and takes full collateral. NextGen is their largest holding, and also IsoEnergy, two companies we also favorize. After meeting Warren Gilman, I invested in Queen's Road Capital, and I like the philosophy of paying a dividend plus raising it every year. At around 70 Canadian cents or 72, we expect for this year a plus 2 cent payout, which would mean approximately a 3% yield per annum. Their convertible bond model is outstanding, as they get full collateral on their investments, a nice interest payment, and have the upside from the stock price side. The point and figure chart shows a buy signal with a first target of $1.30 for the stock. Looking at their portfolio, we think much more is possible through stock conversion in their convertible holdings. IsoEnergy is also a great company with lots of upside potential due to their super high-grade projects. The bottom building around 2.5 Canadian dollars should hold and is a great opportunity for building positions. First price target is 4 Canadian dollars 75 and then up to 6 Canadian dollars. A short squeeze candidate, as I said already, is Uranium Energy Corporation for us. A US hedge fund is short, and the data at shortsqueeze.com shows still 42.2 million shares short sold. Given that UEC's cash and physical uranium counts already for over 40% of their value or share value, we think the shorts can get soon here in trouble to cover. When uranium prices start to move, other investors come back to the market, and then it is getting interesting. In a short squeeze, we see UEC shares rising to $6 to $8 easily and fast. Also, they might restart production in 2024 at uranium prices above $65 per pound. All in all, uranium has seldom looked better than in 2023 and the following years. Queen's Road, UEC, IsoEnergy and also Consolidated Uranium are great companies in a booming sector. Make sure you have for free downloaded our uranium special report with lots of information about the sector and great companies. Please read the disclaimer superimposed now. The stocks might or will become part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.